Welcome everyone. Appreciate everyone jumping in this morning. This is part of our webinar series for fraud. Today's session is on fraud trends and key takeaways, mainly from the 2022 report to the nations, and that's offered through the Association of Certified Fraud Examiners. My name is Tony LaNasa. I'm the managing principal of HW&Co's Columbus office. Also the director of the Fraud and Forensic Group of HW&Co. We also have Jim Horkey, principal in Cleveland for HW, as well as a member of the Fraud and Forensic Group, along with a few others here in HW&Co. So Jim, if you want to say hi.
Hello everybody, looking forward to our presentation.
So we're actually together here in Columbus and presenting together here, so we'll be bouncing back and forth throughout and offering some good insight here. So just wanted to talk just kind of briefly on just overall facts, kind of current events that's happening and so forth. And if you read about fraud and everything, all the information that's coming out, the last few years since the pandemic started has been what they call as banner years for fraud and fraudsters. Has been the most fraud and most fraud cases that have come up ever in the history, and that's just more information, social media, understanding what's out there, what's happening. But there is a lot of fraud occurring in the last few years, and I don't see that decreasing anytime soon. But some of the reasons and factors really relates to ultimately is the economic challenges related to the pandemic. Jim's going to talk about the fraud triangle, that the pressures on people, the pressures on organizations are at or maybe even right now and even in the future will be at its highest level. And Jim will talk about rationalizing that behavior of fraud as well. So that is at its highest in the history, as well as financial performance for businesses. Still, a lot of businesses have not recovered from the pre-pandemic times. So there is incentive potentially to what we call as cook the books at times, and we'll talk more about that here. We all know about businesses and the resources being stretched, people, fewer people doing a lot more things, and you think about the lack of segregation of duties that comes about related to fewer people doing more tasks and duties. So that's an issue for sure. And then lastly, just technology is better, right? We're doing obviously we're doing the webinar here virtually, we're doing meetings virtually, there's a lot of employees working remote now. The technology is better. That's great for all of us. However, fraudsters are using that same technology or even better technology to potentially defraud all the good people in the world. So that's ongoing, and we have to stay ahead of that potentially with that. One of the stats I did see that I was reading was the FBI, the Internet Crime Compliance Center, saw a 70% increase in complaints in 2020 related to the pandemic. And that, again, it kind of goes back to the isolation, working alone at home, you're not having someone overseeing you, looking over your shoulder, things like that, as well as just the dependency overall on technology. So the objectives today, Jim's going to talk about the fraud triangle. We'll dig into that. I'll discuss risk assessment related to business and fraud, and then we'll get into fraud prevention and then impact of fraud. And throughout, we're going to have statistics throughout, just reinforcing, what businesses should be doing to just enhance controls and procedures and so forth. And all those statistics, as I mentioned, it comes from the report to the nations from the ACFE. Jim?
Thanks, Tony. So, Tony's background is probably heavier on helping companies prevent fraud, whereas I've had more of a background of coming in after a fraud has either been discovered or suspicion is out there that somebody within a company is stealing. So I probably have a few more, more interesting stories, but, when we come in and we get called in because, an owner is suspicious that there's something that's come up generally, and, ultimately there was an opportunity for someone to steal and they took advantage of it. But before they get to that point, they generally have to have some pressure, and they have to have some way to rationalize it. And, the industry experts and we agree, think that, there's a lot of economic challenges that are left over from the pandemic. That's going to make it a lot easier for individuals and businesses alike to rationalize, come up with that rationalization of, well, why is this okay to do? So, so that's your classic triangle. When you look at pressures, there's a lot of pressure. When I come in after the fact, sometimes I get to actually interview the person that is, being accused of stealing, but oftentimes I'm talking to their peers. And, there's a lot of red flags. Certainly comes down to trying to maintain a standard of living, family issues. The big three are probably, in my world, what you find out after the fact, it's drugs, gambling, and affairs. So probably in affairs being number one. People get themselves into all kinds of trouble that they can't get themselves out of, without money, and they make some really bad life decisions. A new one that we're going to be probably seeing more on the internal side, and this is something for the auditors that are listening, is that, companies kind of got a pass the last couple of years. 2020, 2021, there was stimulus money, there was, companies that without that stimulus money would not have made their bank covenants, they couldn't have paid their debt. Well, that's all over now. 2022 is a fresh start, and there's going to be a lot of pressure to make those bank covenants and to keep the banks happy, or maybe your company didn't recover and you desperately need a bank loan. But there's going to be some pressure on CFOs and controllers to maybe do things that they're not otherwise comfortable with. So, and organizations are facing a lot of pressures they've never faced before. Staffing issues is what's a big one. A lot of companies have changed the way they do business with, remote working. A lot of people are much happier, one way or the other, and now they're unhappy for whatever reason. And as we possibly go into a recession, it's only going to, but theoretically, get worse.
And Jim, that last item, that regulatory pressure, last few years, businesses have received a lot of stimulus from the federal government, the PPP loans and the employee retention credits, provider relief funds, a lot of other stimulus, a lot of different industries and businesses were offered. And, with regulatory funding comes a lot of compliance. So that's one of the things where, a lot of companies either hopefully have someone internally that has that expertise, understanding of the compliance side, the reporting, what to use the money for, how to report it, and all that, or have someone externally that can help you as well. So that's definitely high at mine too, just making sure you're compliant, the organization's compliant with all of that additional funding and what the reporting and compliance side of that is.
Well, this is a pretty obvious exhibit here. The more internal controls you can put in place, the more you're going to reduce that opportunity. And we're going to talk more about that in detail. And then when you get into rationalization, this exhibit is actually a very old psychological study, and it's really, if you look at the exhibit, you can really take 30%, as 30% of people are dishonest. And that doesn't mean they're going to steal from you, but that just means 30% of people, based on this study, are dishonest. 30% are totally honest, wouldn't steal, wouldn't lie, wouldn't do anything. and 40% are somewhere in between. We call it situationally honest. So that doesn't mean situationally that 40% would steal or commit fraud if they could. It just means that 40% you would never do it in a situation where they thought they could be caught. So it kind of relates to fraud, to stealing, to, you know, really anything like that.
It also comes back to, like, you know, if any one of us is in a certain situation where there's a lot of pressure on, you know, your personal life, something, you know, we may end up making the wrong decision, a bad decision. And that's kind of situationally being honest, right? Because you're not totally honest 100% of the time.
Yeah, and, you know, we all know people who I still believe are 100%. I would never believe in a minute that, you know, some of the people I know would ever do anything wrong. But it's surprising how many times I've gone into a situation where that's who stole. And there's nothing scarier than somebody who you think is totally honest that you completely trust, who's actually completely dishonest. So that's why, you know, we're not going to harp on this today, but background checks are so important. It makes me want to cry when, you know, I find out somebody hired a controller and they didn't, or a bookkeeper or a payables clerk for that matter, and didn't at least do some level of a background check. From a rationalization standpoint, you hear everything. You know, I'm not sure if you can believe every story you hear, but a lot of times they have a family problem, somebody's sick, you know, or they're jealous, or, you know, one rationalization I've heard more than once is, well, management's, they don't know what they're doing anyway, and they're just blowing all the money anyway. I may as well spend some of it too. So
what about your example, Jim, on you're mentioning to me earlier about the borrowing case?
Yeah, that's another thing that's happened. I've come across twice, and that is, well, the first time, you know, the owner always takes money out, and, you know, and one day I decided, hey, can I borrow 10 grand? The owner said, sure. I paid it back. Then I needed it again. I didn't ask the second time I borrowed it, and I paid it back. No one seemed to notice. And then I did it again. And then finally I just stopped paying it back. And, you know, it's
not you personally.
Not me personally. I'm just speaking in third person here. So yeah, you hear it all, and there's a lot of reasons people do it. It all comes down to they need money. You know, maybe they have a girlfriend on the side, and they're, you know, that's spiraling. Maybe they have a gambling problem. They gambled away their kids' college fund. There's just so many things that cause people to do stupid things.
Okay, so our first polling question, again, you have to answer these polling questions to get CPE credit. I will here launch the poll here. All right, the poll question should be launched. Question is, have you or any organization you worked for experienced fraud? Give it about 10 more seconds here. Make sure to answer this question, please, to get the credit. And I'll close it in 3, 2, 1. I'll share the results. So surprisingly, it's you know, a little more than half has in some way experienced fraud in you know, their employer, their organization that they work at. Okay. All right, so we mentioned earlier about the report to the nation. So this report to the nation comes out every 2 years, and it's based on just surveys provided by certified fraud examiners. And in this case, in 2022, it's a little over 2,100 cases of occupational fraud. And there's a lot of good information that comes out of it that we're going to share here. You know, just just on a basic level, occupational fraud, if you just think about that, it's you're really just using your occupation, the place of employment, and using those assets or misusing some sort of resources of that organization. And that could be a misappropriation of assets. That could be something else related to fraud as well. So this is an example. It's kind of a busy slide, but this is just an example of just the fraud tree. You have three overarching fraud areas, which is corruption, asset misappropriation, and financial statement fraud. And then within there, you have all the schemes that can occur overall under the fraud umbrella. Under asset misappropriation, you can see cash. You can steal cash, you can embezzle cash. Also just assets of a business, inventory, other assets of the business can be stolen and taken away. And then all the schemes below that. Asset misappropriation is in most cases that occur. However, financial statement fraud is the highest dollar losses. You kind of hear if someone's going to cook the books, they're going to go big, right? They're going to go big and make the numbers look really good in that case. And that's why you see the large dollar frauds related to more financial statement fraud. This stat here, typically every business in some way loses about 5% of top line revenue to fraud. So again, I think just as a duty for your employer, for your organization, you really need to try to do as much as you can to try to enhance internal controls, try to mitigate some of the risk overall with fraud, because typically a lot of businesses lose top line revenue some way to fraud and abuse. Another stat that came through the report to the nations, you can see here organizations with, and this is kind of interesting, organizations with the fewest employees, right? So the fewest employees had the highest median loss per case. And that, I think that comes back to, right, the not enough resources, not enough people to segregate duties properly. And then it probably comes back to not enough oversight from owners, presidents, those at the top that are overseeing those people on a day in, day out basis. Some other stats here. So of the cases, a large majority is male. So that's committing fraud, which has not changed over the years of all the reports that I've seen. And typically it's internal employees. So it's the position is either employees, it could be a manager, it could even be an owner, an officer of the company. And then typically you don't see someone on the outside externally committing occupational fraud. Now you may see it, with some of the phishing that's happening with someone trying to infiltrate systems and get credentials and all that. You see that a lot. But with occupational fraud, you don't typically see someone on the outside coming in and stealing from the business. Cryptocurrency is a big thing nowadays. You hear that a lot, and the schemes that are occurring with crypto. This is new to the 22 report. So you can see some of the schemes that are occurring under the cryptocurrency area, bribery, kickbacks, and a lot of that too. So in our client base, we don't really see much crypto at this point, but I would foresee going forward in the future, you'll see more and more. More information. So per case, 117,000 in median loss per case. So per fraud case. What is interesting here is the duration is 12 months. So it's over about a year until they actually find out the fraud is occurring. But what that tells me is they don't have controls in place. They don't have obviously they don't have preventative controls, and they don't have detective controls to detect the fraud, right? So and we'll talk a little more about that too. And then 21% of cases involve losses of at least $1 million. So significant amounts of dollars being lost to fraud and abuse. I just wanted to highlight nonprofits too. So most of the cases were for-profit business entities. but we did have 190 cases of nonprofit cases. And you can see the median loss there was less overall, but the average loss is significant, 151,000, so significant dollars. So it's not just, for-profit entities, it is occurring at nonprofits as well. Jim?
Well, we've got some survey stats, and we'll give some opinions on what we think it might mean. I think this first one, perpetrators by department, just telling you that fraud is spread across, it's not just, it's operation people, it's accounting people, but it's executive sales. It's really, there's no rhyme or reason. We think more about, well, the accountants, stealing from the company because they have access to those funds, but it's really spread across. It's really spread across all departments. Over half of the frauds in this survey were perpetrators were around 5 years or less, which, actually I find that kind of surprising, but, while there's a significant number that are, less than 10 or more than 10, what you really find out in reality is those 10-year, those frauds by people that have been around by more than 10 years, they're very much the large ones. And a lot of time, by the time they get caught, you never really know how much they really stole. If you're calling us for fraud help, Tony's going to help you stop this fraud. But if it's me, we're trying to figure out, well, we know they stole, how much did they steal? And a lot of times the best we can do is we can go back, 3-4 years and figure it all out. But for all we know, often it went back, for a long time. So it's kind of like maybe that previous exhibit is how long have they been around until they got caught.
And then I think too, like with this slide, I went back a slide too. I think what this tells you is, the new employees that are hired 1 year or less, they either don't have the access yet to steal, or they just don't know how to steal yet, right? Because they don't know what the opportunities are. But once you get into that kind of that 1 to 5 year, you get a little more responsibility. You get a little more trust overall from the owners and then top of officers. And that's where people then see opportunity, and that's where you see a lot of the cases. And then beyond the 5 years, potentially, maybe there's a little more, what was the trust and so forth overall for people. And then maybe they don't feel that they should be frauding a company because they have that loyalty there and everything for someone.
So criminal backgrounds. Well, one thing is that I think, when you do this enough times, that the police don't always seem to care. And I know when a fraud's been, perpetrated, and for a number of reasons. One reason is companies tend to not want to press charges because it's bad publicity. Do you really want it in the paper that, your CFO has been stealing? It makes it seem like maybe you're not, a good steward of your customers' money. It's hard to prove oftentimes. You might have a situation where, well, that documents were forged. That, a vendor payment in the books actually was in reality, a cash withdrawal at the bank. It's hard to often prove, where'd that money go exactly, even though where the money went. It went into, somebody's pocket. So the other thing that you'll find out, and that is, people that are found who have committed frauds, they don't, as much as I harp about doing background checks, might not find anything. It's very important to call, actually prior employers, especially if it's somebody that you're going to be trusting, with your funds, because maybe they were let go, because they were stealing, but it never materialized as as a legal matter.
And it comes back to the company not, not pressing charges, right? Not going for that next step.
No.
Because a lot of them don't want that bad publicity, especially nonprofits. They don't want that. They're using donor money to provide services and programming. If that hits the paper, that'll hurt overall the future of the nonprofit.
And there's another reason too, that oftentimes is the business owners caught somebody and the perpetrator says, look, I'll go get a loan on my house and I'll pay you back. And that's fairly common too, is they set up some kind of payment program, and if you pushed it all the way to put him in jail, they wouldn't be able to pay you back. So and oftentimes companies with insurance, the insurance companies don't really push for it either. So because the insurance company, they're worried about their claim. So the thing I would take away from it is a lot of the high percentage of the people that actually get caught but nothing happens, you'd hire them again if they walked in the door, and they will walk in someone's door, and they will go get another job as a controller or a CFO or a bookkeeper. They will do that again, and just don't let it be you, hopefully. From this study, the biggest dollar losses are from older perpetrators. And I guess that's not surprising because, they've built up that trust over a long amount of time. There's a lot of reasons. It could be financial need. It could be, sour grapes because things didn't work out in their career and they're trying to make up for it by defrauding the company that trusts them so much. So big one, and I'm going to add a couple to this, is, red flags that you can look for. The number one is, people that how much they make, is you own the business and they're living way beyond their means, and that's, some people are able to live way beyond their means because they have family money or a spouse that is very successful, but sometimes that's just such a red flag and it's so obvious after the fact. How was he buying a Corvette and had a condo in Florida? Based on what we were paying him.
And lots of times too, in cases, there's going to be more than one red flag. It's not like just living beyond means. It's something else that is also a red flag. And I think, just as officers and CFOs and officers of a company, you have to open your eyes to that. And, just if you do see some issues, you're like, this person's acting really weird, lately, the behavior's different, they're a bookkeeper, but, suddenly they purchased a Mercedes Benz and they're driving that to the office. Now we get that there's privacy concerns and so forth, especially on the HR side. So you can't really pry too much, but understanding those red flags, and then just really sort of maybe potentially finding out, what potentially, if there's any concerns or issues there is key.
One red flag that I'm a generalist. I have clients and do accounting, and one of the ones that I personally, as a red flag, is when I all of a sudden the owner says, I think I'm going to spend 3-4 months a year now in Florida. I trust everybody. And that can backfire on you, not only in fraud, but in other ways. So that's always a red flag, is, when there's a change of how things are done. And when you find in and you come in after the fact, you oftentimes, the first thing you kind of hear when you talk to the other employees is they all think they already knew. They knew this was going on and they thought the owner somehow knew. So that's kind of like a common thing we hear after the fact. On smaller companies, kind of what you always hear about the person that committed fraud, generally they weren't all that well liked within the company. They were usually irritable, suspicious, and defensive, and everybody just kind of left them alone. That's fairly common. And just from a general red flag in life is that, you'll find that people that cheat in other aspects of their life, why would you think they wouldn't cheat at work too? So, that's something someone told me a long time ago that's proven true over and over again.
And this next slide kind of tells you that kind of the behavior side.
Yeah,
Right,
bullies, they're good. They're really good at intimidating people into leaving them alone. Usually have control issues. Only they can do something.
Right.
All the classics. They never go on vacation because everybody, or that they do go on vacation, the accounting or whatever function shuts down while they're gone. As far as
HR side?
Yeah, from this survey, this one is, a lot of these people, it's really, to me, this one's not real telling. Sure, a lot of them may have had a fear of losing their job or had some poor performance evaluations. They may have been denied a raise. One thing that's happened a couple times in my career is they were denied a raise and they gave it to themselves anyway. And nobody noticed. So look at those. Make sure if you're the owner or the CEO, or don't assume everybody's making what you thought they were making. You got to look at those payroll reports from time to time.
Yep. Concealment.
Yeah. So when we find out that once we determine somebody's been stealing, they do it a lot of different ways. Probably historically the most common way is they create a bogus invoice. That's a term. That's a industry term, a bogus invoice of some sort, but they actually pay it to themselves, and then they record it in the books as if they paid a vendor. And that's hard to catch if nobody else is looking. So a lot of times the first thing we try to get our arms around when we walk into that kind of situation is, well, where are the cleared checks? They're gone. Guess what? The same person that was doing that also was in charge of, and now you don't even get the cleared checks back anymore. You just get a picture of them. And you have to pay extra for that. And what makes me want to cry is when a company says, well, I didn't want to pay the extra $12 a month to get those checks. It's like, you got to get those checks. And then what you'll find out secondarily is the banks don't really want to help you that much, because they can be kind of part of the problem. So you have to pressure the banks to go and pull the historical pictures of those checks. And, that's usually, the first couple of steps.
And the major, with Jim's example there, the major control issue there was, hey, the vendor makes a call over to the same person that committed the fraud and asking, well, where's my payment, right? So then, you have to have a control in place where those vendor calls should not be going to that person, should be going to someone else. Or if the vendor is sending, a past due invoice in to the company, that same person should not be opening the mail. So there's lots of things that you can kind of segregate duties where if someone's perpetrating that fraud, it could be detected hopefully soon after it occurs.
Yeah, and you've just got to, at the highest levels of the company, somebody besides the person, paying those bills has to get the bank statements and open them. And we have clients where we just know they won't do it, and it's so frustrating. Or they'll say they're going to do it, but within a few months they're doing it, but they hand the bank statement over to the controller unopened. So,
right.
It makes you want to cry sometimes. But when you look at these actual frauds, the biggest losses are when there's more than one perpetrator, and that's because collusion's very hard to combat. If you have one person that's committing fraud in your company, that's one thing. Controls, you might catch them eventually by accident, but if you got two people colluding, that's pretty hard to find. That's pretty hard to catch.
All right, so the next polling question here. Let me launch it here. Okay, it should be launched. So which tenure group has the highest risk of fraud? This is just back to the number of just pure cases of fraud, not dollar amounts, but just cases. Now, while you're answering, there's a question about, again, actually, there was a question that came out about collusion. Collusion about with an employee and a vendor. We see it a lot. We see that a lot, where an employee has, gains a relationship with a vendor. They collude where potentially the vendor is paying for additional amounts that the employer is not receiving, and then the employer, the fraudster on the employer side, is pocketing that difference of the money that they're receiving, and then they're doing kickbacks back to the vendor related to potentially what is being defrauded. So there's a lot happening with collusion there. It happens all the time. We'll talk about how frauds are detected, and the highest way it's being detected, frauds are being detected, is by tips. So we'll talk about that here in a little bit too. So let me close the poll here. I'll share it. It looks like about between 1 and 5 years and 10 plus years. Okay. So just getting to the risk assessment side, I think everyone should be considering, if they have never done a risk assessment, either with overall business operations and fraud, that they should consider that. It might be a good time to do that. But really what it is really just asking questions to yourself, to others in the organization, on really ultimately how can you commit fraud? How can you steal from us? How can you steal from the employer? And it's really getting back to that. Well, I do see this opportunity. I'm never going to obviously do it, but I do see this opportunity. And then that's how you kind of build some of the controls behind. Okay, well, let's try to minimize that risk overall of that potential issue. So, again, it comes back to trying to be specific to the organization, their personnel, their duties, their tasks. It gets back to like trying to consider the size of your organization as well. And then it needs to come from the top to the bottom. Everyone really should be on board with this, with the risk assessment, and everyone needs to be involved. A comprehensive fraud management is, and this is more related to the pandemic side, is fraud risk is very fluid now. So assessments should be more frequent. Maybe previously you did one every few years. Now it's probably, you probably want to look at that when personnel changes have occurred, or duties have changed. People are going remote now. So you really need to look at that and see how that impacts overall your risk management of the organization. Obviously fraud risk it should be expanded to, like, really, as Jim was saying, all facets of an organization, all departments, looking at all departments, not just accounting and finance. And we talked about everyone really needs to be involved, especially on the remote side, remote working, and that needs to be assessed for sure for businesses. We talked about, we mentioned the 2 types of controls, preventative, detective. Obviously, the preventative controls are a lot better because they prevent the fraud from occurring for the most part. But that can be costly to a business, more costly. So maybe you kind of add some detective controls after the fact, where there's more oversight and review at the back end, where potentially it can be detected. This is kind of a good visual this is where a company looks at a risk assessment, and what they do is they look at the different tasks and areas of a department, of an organization, and then they lump in those tasks and areas within different parameters, different matrix areas, where then it'll tell you, okay, well, we definitely need a control priority, preventative control here. And in another case, maybe you don't need something here because it's likely, low likelihood of occurrence, and it's really not, not a major impact of the company. One of the examples here is, say, in your building, in your office building, or in the building that you're producing, widgets and so forth. And that's a major major impact to the company, right? You're producing something there, but what's the likelihood of a fire happening there? Probably, probably unlikely. So in that case, you lump that in where you probably want to just get property insurance for it, right? You get property insurance, you cover yourself if it does occur, in the back end if it does, and then don't really need internal controls overall for that aspect. But then other duties, tasks, you may need it because it's going to be a high likelihood of occurrence as well as a major impact to the company. So the next polling question here that I'll watch. Okay, so have you or your organization ever completed a formal business fraud risk assessment? There was a comment that we received related to red flags, and if health issues is a red flag. Yes, that's comes back to a lot of people potentially may need funds to pay for those health issues, and so forth. So that's where you kind of see a red flag there. Okay, I'll give it about 5 more seconds. For the polling question, 3, 2, 1. Close it. I'll share it. So a good amount, a little less than half have gone through a risk assessment, which is good. And I would suggest the others potentially they may want to consider it. Okay. All right, over to Jim.
Okay. Well, most common fraud prevention techniques that are happening today. One thing that the pandemic proved is that companies can rapidly change how they do business. Think of all the people on the call where within a week or two, the entire company was remote, and all the things that had to go into that. And that just shows that companies can make changes, and they are making changes. And some of the changes they made hopefully will stick. But I think one thing, management review is probably the most common thing that's happening more, and that could be related to just the changes of how business is done. But when everyone's remote, you kind of get a sense more sometimes of what everybody's doing. So being proactive, data mining right now by outside fraudsters is huge. Surprise audits, internal, all these things are, providing training, internal audit, having an internal audit department where maybe you didn't before. All these things are on the increase, and I think that's all great.
And I think a lot of organizations too, you'll probably want a lot of these different, these common fraud controls. You definitely want management review. Maybe you'll do some data mining. We'll talk about that here in a little bit. The audit side, you have an external audit potentially. Maybe you have someone internally that, I wouldn't say you have an audit department internally, but maybe you have someone that just kind of does some checks, overall, periodically throughout the year of different things.
So the primary internal controls that are being observed out there, the big one's always lack of internal controls, and that especially hurts small companies. And oftentimes, not having internal controls or not, or overriding those internal controls, are kind of lead down the path to that opportunity. We see a lot of override of existing internal controls. Companies think they have them, but then in reality, well, the owner's never around on Fridays, so he leaves his, check stamp to somebody he trusts. And it's hard to tell somebody, because more often than not, by far, probably people that you think you can trust, you really can't trust. But because we only see what happens after that trust is broken. So it's hard for me. I have clients that they trust their people, like family, and they're never going to stop, and that's okay. It's just our job to get as much internal controls in place as possible, and to occasionally poke them to follow those controls.
And we see sometimes too where they have they have great controls on paper. We read through controls or flow charts and like, yeah, this is really good, strong controls. But then when you start interviewing employees and asking exactly what they're doing, they're not following at times certain procedures, right? So that's also too, you have to really dig into it and understand exactly what's happening and occurring and what's being followed.
So, for those in a position at the top, or you've got to ask yourself these questions. I don't really want to read them all, but these are all good ones. Are we providing training to everybody in the organization? We're setting good examples. Is there, a mechanism in place to, prevent fraud? What's the tone at the top? Is the tone at the top one of honesty, integrity, or is it, are you going to have employees questioning that? Probably one of the things employees see that makes them wonder is they see owners getting perks with vendors and things like that, and they think, well, then I can too, and maybe they can. Maybe that is okay, but then that's how things. Next thing you know, you've got a vendor that you're paying double that versus another vendor that would, that doesn't going to take you, out for steak dinners and golf trips, who's going to charge half the price.
And we have an interactive checklist that's offered through the GoToWebinar handouts. So if you want to pull that down, it's only just a 2-page. That it's more reminders, questions again, as Jim was saying, questions that you need to ask yourself and others. Are you doing this? Should you be doing it? If you're not doing it, things like that. So if you want to pull that down and use that, you can.
So we got some techniques. Well, Tony, we want you to pick the first one.
Yeah. So again, we talked about kind of the invoicing and things and mail opening. I know a lot of times nowadays there's not much mail that comes in as far as checks and things, because it's potentially a lot more electronic now. But if you do have checks coming in, a lot of invoices coming in now in the mail, you want to maybe consider having more than one person open mail, or maybe change duties overall on a weekly basis or something, just to have more than one person dealing with that. Jim, you want to take the next one?
Yeah, this is a big one, and it's a big inconvenience for small companies. But you have to have specific check signers, and they should not be involved in the keeping the books and records. And the signed check should not go back to the payable person that created the
actual check.
The actual check
Right.
Should go to somebody from that point to mail.
Then the next one, payroll. So I think most companies are using direct deposit, but if you're not, or if you're not doing it completely, you definitely want to consider that for sure. Jim, the next one.
Yeah, it's another big one. Don't get those bank statements and canceled checks sent directly to the executive or owner or treasurer of the company. It needs to be someone outside of the cash disbursements process. If you have to pay extra to get those canceled checks, and pay that extra. Don't think you can just get them later if you need them.
The next one, back to the check signers, making sure that check signers are double checking, right? Checking the invoice to what the amount is, what the vendor is, all that before they even sign the check. Jim mentioned having that signed check never going back to the accounting side, where they can actually manipulate the check then after it's signed, and then obviously, conceal it in the books, right? So that's important. Jim, the next one.
Yep. Make sure you're doing things on a monthly basis, reconciling, all your balance sheet accounts to detail, especially the bank accounts. Another red flag is, well, we don't reconcile the checking account. We do them, we might have 15 months we haven't done it. That's a darn big red flag to me.
Yeah, and then also too, just comparing the budgets, making sure you have a budget, comparing actual to budget. If there's fluctuations, having that person then asking the accounting department, what's going on here? Why is this over or under budget? Because that's key too. It comes back to the perception of accountants and others that have access to these funds, where if they know that someone's overseeing it, looking at the numbers, asking questions, digging into the details, they're less likely to commit the fraud. And the last one here is just a bonus. We talked about a little bit is, a lot of the phishing that's happening, that you just get emails in your inbox. It looks like it's coming from the president of the company. It's telling you to wire over this amount of money over to this bank account. If that doesn't happen very often to you and it's very unusual, or the dollar amount's really high, just picking up the phone and asking the president or the person that sent you the email, did you send me this? Is this legitimate? That's probably a great control to have.
Yeah, there's been a big shift from, a few years back when the outside crooks, let's call them, were stealing personal information of individuals, to the big thing now is obtaining somehow your login credentials. And it's not just your company. They might not even care about your company. They're targeting one of your clients. They might be targeting your biggest client. Say, if we can get into this company, then we can get to that company. And that's a good way to see your business go up in smoke.
Right.
If they're successful.
And then this is just a summary we talked about, really, the behavioral red flags, making sure you're aware of that, keeping your eyes open, understanding what your employees are doing, having a good, strong system of internal controls like we talked about. If we have lots of clients that don't have a large business office, but trying to do your best to segregate duties is very important. Having an anti-fraud control policy, and then following that policy is important. And then we talked about data analysis software, data analysis, data mining. That's key too with a business, just so it doesn't take a lot of time up front, running all this analysis. It may take a little bit of time, looking at the results, but it really just pulls out a lot of the anomalies out of the data, and then you can take a look at that data and see if you need to really dig into it. This was mentioned earlier, so just with the detection techniques, the number one is tip. So that's huge. So really getting back to, all businesses really should have a tip hotline where employees or others outside the company can call and provide an anonymous tip overall about what issue they're seeing. The sources of the tips, you can see for the most part it's employees, over 50%, 55%, but you can also see customers, vendors on this too. So not only providing the tip hotline to employees internally, but also providing the tip hotline to outside external parties like customers, like vendors, as well, is very important. We talked about the detection is tips, and employees are the number one source of tips, right? So making sure you have that tip hotline is very important for a company. This is just more of a visual here, lowering your fraud law, or having an anti-fraud control policy and following that policy is very, very important, which in most cases too, it'll tell you that if you're looking at companies that do have that and follow it, it lowers fraud losses, and if there's a fraud that does occur, it detects it quicker. This is just, again, I know, Jim, you were mentioning some organizations that we work with potentially with the tip hotline.
There's a company that was founded in Akron, Ohio called Red Flag Reporting. We like them a lot. They do a good job. There's a lot of them out there, but feel free to email or Tony, or call Tony, or I will hook you in with them. You can find them on the internet. It's called Red Flag Reporting. A gentleman named Ray Dunkel founded that, and they do a nice job. And it's really pretty, in the big picture of life, pretty reasonable cost for that, to give your employees, some place to call if they can do it, without letting anyone know it's them providing that tip.
Right. And then back to the data analysis again, talking about that. I think if you can, either internally do it or have maybe a CPA firm do it for you. The good thing about that it actually is looking at 100% of the data. It's not doing a sampling of it. So it's looking at all the data, it's running testing, and it's pulling out just information that really is not usual. It's unusual relative to all the other data within it. So just consider that. The next polling question here is, Does your organization use a tip hotline? I know we only have a few minutes here, so I'm going to leave this open just for a few seconds here. So if you do want the CPE, make sure to answer the polling question here. I'm going to close it here in 3, 2, 1. I'll share it. And you have some that have a tip hotline, and but the majority do not. So for those that do not, you'll probably want to consider doing that for sure. Okay. So impact of fraud. Jim?
So, you know, this is all information you gather after the fact, right? So doesn't include all the ones that have never been caught, but, you know, perpetrators tend to be well educated, but that doesn't mean they're all that smart because they got caught. And that's usually what we find to be the case. It's like, you know, they get greedy. And that's usually the number one reason, one way or the other, of why they got caught, is because they got a little too greedy. If they would have just stole a little bit, they probably never would have been caught, for all we know. Mostly this happens to private companies, you know, and which seems relatively obvious because they have more to steal and less ability to put in the internal controls, which are not cheap and take manpower to have. We keep on going through these. So, you know, corruption's the number one scheme, which we think that, you know, this includes government entities, and we think that's probably why. I think we probably see more check tampering, you know, billing scams, you know, skimming. You know, we generally hear more about expense reimbursement issues. You know, for you auditors out there, you should be looking at expense reports for the you know, even the highest level people. You know, you get more. It gets a little bit more skewed as, you know, what organizations report fraud, and that could be partially because generally the larger organizations can afford to hire a CFE, or they may actually have, you know, better insurance, or actually insure some of the fraud that comes along with, you know, it. Sometimes the insurance policies is, you know, somebody that will come in, generally a CFE type, who will come in and quantify that theft.
We talked about the median losses overall, but this is kind of a breakdown between how large the company is. But you can see just significant losses across the board here, as well as by company, you know, by industry as well.
You know, kind of finally, I think we're toward the end here. Well, after you discover a fraud, more than half the time, you know, you don't recover none of it. It's just gone. And it's pretty rare where you recover all your losses back. It does happen from time to time. And then, you know, oftentimes they give back the money that they can and set up some kind of payment plan, or they have another source to find assets to reimburse the company once they're caught.
You can see here just the different industries. Again, the bottom line, it's hitting all companies wrong. And then discipline and so forth, you know, the law enforcement and things with that. So last polling question. Make sure everyone gets their CPE here. So what is the most prevalent scheme in the 22 report to the nations? We kind of went quick over that slide, so we only have.
I did say the answer.
And I'll leave this open for 5 more seconds. Make sure to answer the question. 3, 2, 1. And I'll share it. And the answer was corruption here. So thank you. So I appreciate everyone's time. You know, hopefully you took away some information from this. if it's just a couple things that you want to implement in your business on the control side, it would be great. And I don't know, Jim, you have any last remarks?
No, I hope it keeps everybody thinking, about fraud and how to prevent it. All right.
Thanks, everyone.
Have a great day.